Hi everybody, Alex Deployer from Expert Forex, and I hope this video gives you lots of money-making Forex trading ideas. And in today's video, we're going to be discussing money management and greed in the Forex market. And on your screen, you can see an example of the consequences of not applying sound money management or sound strategy to protect your funds and your investment. And then at the same time, obviously, there's a lot of greed involved in this process. So let's talk about all that in this video. So some of the material that I'm going to be going through comes from our $30,000 competition that we are running on all of our EAs. And the purpose of this competition is to show that all of our EAs, firstly, are current, and secondly, can be traded very profitably. And you can see that on the screen right now. And just out of interest, we are running a promotion where you can purchase all of our EAs, and as you can see, they're all profitable for an 80% discount. And I'll be giving you the link for all of that in the right hand top corner right now. So just click on that link and you can then go to the competition page, which will also have the discount button on it. This type of thing happens all the time, and I'm number one guilty for that. This time last year, I had a crypto portfolio of over $100,000. I was very lucky in that I extracted all my initial investment out of that so I could leave my portfolio on a risk-free basis at that particular point. But unfortunately, that portfolio went down to $15,000. I lost $85,000 by being greedy and not protecting my gains more. So another strategy would have been to cash in half of my gains and let the rest ride, but the crypto market was so hot at that point, I saw my 100,000 going into a million. So look, greed is a problem, and we don't realize it at the time, and these things happen. There's also an example here. I got an email just this week. I have a 25k live account with a particular broker, which I built up from $500. Now that is amazing trading using several of your techniques. Now, again, the point is, if you have made such wonderful gains, don't leave them in your broker account. Withdraw the thing, the gains, and make your investment risk-free, or at least capitalize a huge amount of your gains. You don't have to have huge amounts in your broker accounts to make huge gains. So we are all guilty of this type of thing. Now I'm going to just show you another example. As shown earlier, we are running this a huge competition, and here's the grid trend multiplier EA. It's a very powerful EA. It can generate huge gains, but at the same time, it can actually generate huge losses if you over leverage your account and do not control your lot sizing and that type of thing. Here are the current results. We've got a leader up there with 180% return, and then we have a lot of followers from then on. So all of that looks good. But then if you look at this column here, peak equity, and you click on it and sort it by the highest peak equity achieved, you get a slightly different picture. So let's do that. And here we are. I've now sorted peak equity. This is the best somebody has done in the competition at their best points. So here we have somebody who achieved almost $40,000. So all competitors start with 10,000, so this person increased their account by 30,000. So if we now look at what that $30,000 profit turned into, it turned into a loss of $7,000. And that's what that beginning slide refers to. The person made a $30,000 gain, but now has a $37,000 loss. Incredible. Now, again, these things happen. It is a competition. People do funny things. But the big point here is that if you look at that gain would have put him well in the lead of the competition right now, and there's another one just behind him. So that's not only that particular person, there's the one that's even worse. They've given back all their profits and their account, so there are a lot of people that are worse off than that. But the point is, both of these were well ahead in this particular competition, and the strategic thing would be to do is to just freeze your account. In other words, cash in all your open deals, freeze it, and then continue trading, because the rules say you have to continue trading, and you just continue trading using one micro lot, and you don't expose yourself to huge losses or profits. And strategically, what that does, it puts pressure on your followers to try and catch you and beat you, and you can just sit back and watch your followers try and do that. But so these traders, not only did they forfeit the possibility of winning the first prize, which in this particular EA is $800, not a bad first prize, but they basically gave that away by just continuing to trade. And there are two elements to that. There could be the greed element, there could be a gambling element that was involved there. With the advantage of hindsight, what one would do is you would actually freeze your account. In other words, stop it. Because you can't withdraw, in this competition, you can't withdraw your funds, but you can freeze it and then start trading really tiny deals just to keep it active for the competition purposes. Now, there are a few people that have done this. If you look at that, this person has given back 7,000. I'm not sure if they're still alive or not, but or trading live or not, but they are in the lead by quite a bit. And they could use that approach, or they could be greedy and say, no, I'm going to push it to 300 so that nobody can even touch me. So this competition brings out a lot of strategy amongst the traders, and it's interesting how they respond to it. And now here's a few others that had all of these would have been pretty close to leading the competition right now, but they gave it all back by trying to push the results. Here's one in second place that has in fact frozen their account. You can see it's basically frozen. Peak equity was that. They froze it at that. They're still trading. They're trading small amounts, but they are sitting there and saying, all right, I'm waiting for this guy to topple over, or if he doesn't, I will start chasing him pretty soon. But now's not the time. I've still got 2 weeks to go, so possibly that's what the strategy is there. And then there's a few others that are very similar. If you look at this guy, peak strategy, peak equity there, latest equity is that, so that is the right approach to follow. And here are some of the chasers. They still chasing. They you can see they're very close to the equity level. So those guys are still running. So when you're trading live trading and you're starting to do well, which invariably you do with forex trading if you've got the right approach, the first thing to do is to create risk-free investments. Like even that crypto account of mine, I withdrew my initial fund, so I created a risk-free investment, so I can't really lose on that. But in reality, I did lose 85,000 off my profits, not off my investment. Then the other approach is always, in spite of what's happening, in spite of if you think you're going to be trading to $1 million, please remember, a bird in the hand is worth two in the bush, as it shows there. It is better to be conservative, cash in or withdraw money out of your broker's account as often as you can, to make those funds safe from not only from the broker, because brokers do go broke, but also from yourself. If that money's in the bank, then you can't touch it either. So just remember that. And then, as I said earlier, protect your gains by withdrawing them regularly. As you're making money, just withdraw it on a continuous basis to make sure that you don't run into the examples that I've shown where people literally trade their accounts to dizzy heights and then give it all back to the market. And I think that's a common theme with a lot of traders. And then develop a skill of only trading small accounts. Now, for instance, a lot of people say, oh, I'm going to put 50,000 into a trading account, trade the Forex market. Now, firstly, the conservative way of trading the foreign market is risking 2% per trade. So if you're risking 2% per trade on 50,000, you're risking, let's say, $1,000 per trade. So I would say that by the time you've had 10 losses in a row, you must know you either got the wrong strategy or you don't have the skills to trade the market or something along that line. So why put 50,000 in your account if you know by after 10 losses that you're not in the right that you're not trading the right strategy or whatever? Then why not just put 15,000? 15,000 will cover your margin requirements, and after 10 losses you can say I'm on the wrong track here, and you can then make a decision whether to put more funds in or take them out. Now the advantage of that is, firstly, you've got a stop loss on your account. So your 35,000 is sitting with your bank, your 15,000 is with your broker, and you cannot lose more than 15,000. You know, I've seen a lot of people that trade conservative and then they start taking more chances, and remember, in forex trading you've got to protect yourself from yourself too, because everybody goes through a mad phase where they take excessive chances. So you've got to firstly protect yourself from yourself, then you have to protect your funds from your broker, because brokers do go under or they do funny things to get your funds, and you always have to stick to the principle of a bird in the hand is worth two in the bush. Now I hope I've given you something to think about. It's not something very nice, but this bit of advice can actually help you protect your gains tremendously. It's a psychological thing, so just be careful of it, and I'm warning you about it because there are a number of examples of people that haven't followed those basic principles because of greed, sometimes because of inexperience, or even a lack of common sense. From me, Alex, cheerio.